G'day everyone, welcome back to Pete's Investing. Today is June 10, 2023. This is the S&P500 update. Looks on our weekly and on the daily, we're still making in a bullish momentum and bullish bias on both. So primarily bullish trades should be taken. However, we are seeing a bearish divergence on the 1 hour chart, which we may see a bit of a pause. But let's look at each of these in detail. On the weekly, both the CCI of the moving average of the CCI 150 and the moving average of the price chart are both bullish, giving us this bullish indicator down here. So it's a bullish bias primarily on the weekly. On the daily, likewise, it's broken up again after being neutral. It was broken up again into a bullish bias. It is still gravitating around this ascending trend line. So it's really a key area we've highlighted some weeks ago now. We did have a key resistance up here at 42.34. That looks now it's been breached, and now we're looking at this minor resistance forming at 43.22. If the price bounces down from that, we're going to make that our major resistance. Now, as I said, the price has been making new highs. However, we may see a bit of a resistance where we are at the moment if the hourly proves correct. And on the hourly, what we've got here, if I zoom out, I did draw this bearish divergence on the CCI. I paused it there, but then it continued. You can see there it dropped off, and you can see there the price chart kept moving to the upside, but the CCI keeps retreating. So that's still in a very bearish momentum. Now, these generally work, but sometimes they fail, but most of the time they work. This one's a pretty long stretch, as you can see. The way to read this, if this long divergence plays out, we need to see a break below this bottom channel, and our initial target area would be between the 50% and 61% level of the Fibonacci drawn between that low. And actually I should change that, configure that, and I'll move that to that level. That now changes the so that'll be our initial target area. So you need to take it from the recent high to the more recent low, which we drew there. Now, having said all that, let me just realign that, make it a bit neater. Having said all that, you could argue that the first part of the divergence failed, and the new divergence started from that point to that point. So it'd still be the same trend lines, those dotted lines between that point and that point, in which case we need to draw a new channel for a smaller time frame. Let's just draw it between there down to that lowest point in that little channel there, if you want to focus on that, in which case it's going to get a bit messy. I'll just delete this higher Fibonacci, and I'll delete this higher channel as well. So what we do now is we place another, you can pull it to any one of these recent lows. I prefer to take it to a more significant low, to that high, as a Fibonacci level. So you can see there, if you just look at that smaller divergence range, in that little area there, not the bigger range we drew earlier, our initial target area now seems to line up. If it broke below this channel, our initial target area will line up closely with this previous, or this current major resistance line we drew. So that may be where the current price pulls back to and lands on that resistance line possibly. So I'll keep that resistance line in there, even if this becomes our major resistance in the coming hours. We're going to keep that there just as a reference point and see if it reaches that target. As well, in terms of trading, without looking at divergence, again, trade in the direction of the weekly and daily bias on those little indicators when the CCI and the price chart align. And you take the same indicator on the hourly chart. You can see here on the hourly, we've got these bullish backtest and a bearish backtest, and they both average down a number of times in those pullbacks, both up and down. And the way to avoid those is to make sure that the again, primarily bullish trades, if I zoom out, primarily bullish trades from about April 23 during that period, which correspond with April 23 in those weeks. So you would have taken primarily long trades in that period only during April 23, which is back there So only those periods you would have taken long trades. So a few trades there which would have been a bit more better probability of success had you lined up the weekly and the daily. So to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page where we also do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching and see you in a future video.